How do you do, ladies and gentlemen? I'm your host, Seth Julian, welcoming you to today's session. We are going to be talking about the coming Euroland energy crisis. Hi, Mohammed. Good to see you. I would ask any of you, the rest of you also, to please tell me if you can hear my voice, see the opening slide, and we'll begin forthwith. Let me just say by way of introduction, I'm 65 years old. I've been trading the capital markets for 52 years now, and I started my career out on Wall Street in the 1980s, working for an outfit called Bankers Trust Company, and have since worked with two other major global financial institutions, and I'm currently the Chief Global Strategist here at Alvexo. I want to just say, well, a couple of words. By the way, only Mohammed has responded. I hope the rest of you can hear. Can see the opening screen. My system seems to indicate all systems go, but you never know. So I'd like some feedback just to see that everything can be heard and seen as it ought to be. Just to respond in the question area, just say hello. Just let me know that everything's okay. Type in, whatever you want to type in. I want to say tonight that I'm not really pleased with the PowerPoint presentation, so I'm going to stray from it a little bit. It's a little wonky. It talks about the actual, well, you'll see. I don't have to preface it too much. Let me just say that I will be, looking at this, and then as usual, of course, when we finish the presentation proper, we will go to some assets and talk about some actual positions we can trade. But I'm still a little concerned that only Muhammad has responded. Please let me know if you can hear my voice. I do get concerned that I just am blathering into the ether here, and I need a little bit of confirmation. There we go. This Simon says all good. Okay. Guinale, Montage, beautiful. Okay, great. That's enough for me. Bruce, Barbara, Irwin, great, good. Thanks a lot. I appreciate it. That's good enough for me. Okay, so I do only have one protocol in the room that I ask you to observe when you can, and that's to participate, to have some back and forth, some dialogue, so that we can keep it from becoming a coma-inducing monologue. Okay, with that, let us begin. So I'm going to go through the PPT the PowerPoint fairly quickly, because I do think it's a little dry, and as I say, I for some reason over-wonked it. It's a little wonky, and I want to know, as you the regulars know, I like to talk about actual trading opportunities as the title insists, market trading opportunities. So let's get right through the dry, wonky parts, and we'll move on. Of course, if you do have any questions, please ask them. So as disruptions in Russian gas supplies bite, and for those of you who have been sleeping under a rock, let me make you aware that there's a land war in Europe going on. It's between NATO and Russia, and it's taking place in the Ukraine. But make no mistake, it's a war between Russia and NATO fought on Ukrainian territory. And I'll show you in a moment. Maybe I'll show you right now. Just give me one sec. Yeah. Take a look at this. This is Russia's gas pipeline. This is the Europe's gas pipeline network. Okay, it doesn't show you Nord Stream. Nord Stream comes around like this, but as you can see, the choke point of Russian gas supply to the west, from the east, that is the Eastern Asia, goes through Ukraine. So this war is, among other things, I mean, it's also between keeping Russia out, keeping NATO out of the Ukraine, but it's also about reorienting Russian gas flows from west to east. And so what we're seeing, and I'll show you something since we're looking. China boosts LNG imports. Oh, for goodness sake. China, oh, sorry, sorry. China boosts LNG imports. This was in today's Bloomberg. From Russia to the highest since 2020. Okay, so that there's no more proof needed that they're going to be taking imports from the Russian network that goes into China for LNG, and they're going to be selling it on the open market for way more than they pay. They're buying it, by the way, at deep discounts, about 25% discounted price. So that's happening as we speak. And well, I just wanted to digress and show you that. Okay, so as Russian gas supplies bite, and they have shut down their Nord Stream 1, the major pipeline that doesn't go through the Ukraine, was pumping until Saturday. They've closed that down, and they're not going to be opening it up anytime soon. French nuclear power and Norwegian hydroelectric power have wreaked havoc in Europe's energy markets. Prices are verging on the surreal. Let me see if I can just move. Oh, I'm sorry. I'm a better trader than I am a video jockey, folks. So just forget it. I'm sorry. This is, you can't really see it because I made a mistake by putting this chart here, which I didn't want to do. But at any rate, prices just go through the roof. Here's the outbreak of the war in February, and you can't see it here. It goes like this, and then it goes boom, up to here. It's fallen back a little bit in the last 2 weeks, but that's temporary, I assure you. Benchmark natural gas prices surged by 30% last week. 1 year ago, French and German future contracts for electricity traded around about 100 euros per megawatt hour. Recently, they were more than $1,000. So let's just get the old calculator out. 100, 1,000. That is a 900% increase. How's that? 900%. Coming energy crisis? I meant energy crisis is here. And when I say coming, I just mean that it's only going to get way worse. Way worse. Prices have receded a bit, but gas still trades at the equivalent of around $400 a barrel for oil. And I'll go through this in a minute. Oil major Shell's CEO has said that the crisis will last for several years. He wasn't kidding around. Now, I just want to go through this quickly because, and I said it's a little wonky, and I meant it, but this is stuff we need to know. One natural gas contract equals 10 billion BTUs. That's 10 to the 9th power BTUs, and it looks like that, 10,000 million. Or 1,724 barrel oil equivalent of oil. Remember, we're still talking one natural gas contract equals about 1,724 barrels. And a barrel equals 42 gallons, 159 liters. 6.3 barrels equals a cubic meter. 7.3 barrels equals a ton. And one natural gas contract equals about 360 ton coal equivalents. 360 tons of coal is one of these natural contracts, gas contracts, and one gas contract equals about 3,000 megawatt hours. I told you it was wonky, but you need to understand this to understand the scale at which the gas has driven prices up. The pain of this reality will be and is intense. It will also be broad as households and firms' existing energy contracts expire and new ones are entered into. That will intensify the pressure and damage on the economy that is underway as the European Central Bank raises interest rates, which they did today, 0.75%, to combat the inflation, which I, by the way, think is a mistake because European inflation is not caused by demand. It's caused by this energy crisis, which will slow the economy down in its own right and lower inflation down naturally. But naturally, the European Central Bank is usually behind the curve. Now, some predict a recession in the next few months, and the euro is near its lowest level against the dollar in 20 years. It's trading at parity. It's 1.99 handle, 1 point something handle. It's 1-to-1. It hasn't been that way in 20 years. Now, this is a point that I want to emphasize, and it's not so wonky. This is an important point. The possibility of unrest and conflict among member states is approaching. We'll get to that in a moment. Brussels' reaction has not been so bold. It is planning to limit on the price of gas used to produce electric power. This will be a topic of some of ministers tomorrow, actually. The Commission will likely discuss an overhaul of the power market so that spot prices are no longer set by the cost of the marginal producer. That's usually natural gas. Spot prices of power, that is to say. Now, this is a ass-backwards policy, in my opinion. Limiting prices is going to be counterproductive. Putting ceilings on the price of the energy will not decrease the demand. One study revealed a cap implemented in Spain has led to a 42% increase in gas-fueled electricity production since June. That's obvious. It makes sense of it. The price is limited. People will demand more. It's an artificial way to limit. An EU-wide policy would only increase the demand for gas further, likely requiring rationing in the winter. It's going to require rationing in the winter. The Germans are already planning a rationing scheme. Now, some renewable energy firms, which will produce at close to zero marginal cost, rake in profit. We're going to take a look at those firms in a moment when we go to the actual assets that look good as a result of this. If gas prices were to stay high for years, such windfalls could be described as unjustified rents, but that same price signal ensures that gas-fired plants generate power when the wind fails and encourages investment in, and it also encourages investment in renewables. We'll see. Or the European Central Bank, the European Commission, the EU in general will limit those unjustified rents. You'll see that soon. Now, again, this is opinion. I could be wrong, but it won't be the first or the last time. But focus should be on two bigger objectives. The first would allow the market to curb the demand, which is what they need to do, while supporting vulnerable people. Mrs. Trust, the new, oh, by the way, I should add, by way of slight digression, my sympathies to all of the Commonwealth members who just lost their queen a few hours ago. 96 years old, the new King Charles III is taken over, and well, for whatever that's worth, I said it. Handouts will be needed, but targeted assistance can limit the cost. According to the ECB, policies that offer rebates and cash transfers to the poorest 40% of people would be cheaper than the policy mix today, which largely includes tax cuts on fuel or retail price limits. The second objective ought to be to increase supply. We're going to talk about this in a little more detail as we roll through this. Other sources of natural gas can be developed. President Macron just visited Algeria a couple of weeks ago for that very purpose. Within Euroland, countries can help reduce choke points such as inadequate cross-border gas, and we're going to go look at some maps in a moment, and cross-border gas interconnections. Today, insufficient investment and differences in standards impede the flow from Spain and France to Germany and Eastern Europe. Why Spain and France? The only two LNG terminals currently in existence, except for the floating ones, which are obviously temporary and much lower capacity, that the Germans are, and there's one that was in Rotterdam that just came online today. But again, it's small potatoes when you compare it to a real full-size plant. The current European LNG terminals, and when I say LNG, I mean liquid natural gas. See this tanker here? Those giant spheres contain liquefied natural gas. It has to be regasified in order to go into the system. That requires a dedicated plant to do that. There are only two of them at the moment, permanent ones. They're in the coast of Portugal and the coast of France, and they're not connected to the European gas network. Huh? Yeah. So they have not been investing properly. They have been over-relying on Russian supplies, which, by the way, as those of you who are regulars in the room know, I'm not a great fan of U.S. foreign policy. I think it's mostly usually misguided and poorly executed. However, in this case, the U.S. has been advising Europe for decades to lay the hell off of Russian gas and diversify. They haven't, because it's certainly been German policy to engage Russia through the use of the method of buying their gas in the lame hope, I should say, that Russia would join the Brotherhood of Nations and become more democratized and more rules-based. No, it didn't happen, but the EU needs to ensure that if rationing comes, there's a continent-wide agreement about which users are cut off first. Without this, the danger is that countries will hoard supplies. Remember, I made reference to the fact that there's going to be conflict, and conflict there is going to be. This is going to be expensive. Greece, Italy, Spain, Euroland's highly indebted countries have spent about 2 to 4% of their GDP on government handouts to lower the energy shock to their citizens. The EU has the resources to do this job, and its $807 billion pandemic recovery fund is being dispersed as loans and grants. Less than 15% of the allocated amount has been dispersed. So they have a lot of ammunition, powder, as they say. They have a lot of powder in their larders that they can distribute. Payments for energy projects could be accelerated, and the Commission could offer cheap loans to help fund targeted recipients. The EU came together to tackle the economic consequences of the pandemic lockdowns. This energy crisis requires a similar response. Europe's energy war is heating up. The EU is preparing to boycott most Russian oil starting from December. Russia is restricting her gas supply to Europe. On August 31st, it halted, and I mentioned this earlier, flows through its biggest pipeline, citing maintenance. They always cite maintenance. They shut it down on a allegedly temporary basis, only to be shut down permanently because they claim they can't get the parts due to sanctions. It's all political theater. The confrontation has caused an energy crunch. Wholesale gas prices 9 times what last year's was. This is a little repetitious, linked to the marginal generation of fuels. Prices, power linked to the marginal price of gas has skyrocketed. This is sort of redundant, so I'm going to skip through this because I apologize. This is not one of my better PowerPoints, and so we will adjust for that by skipping through a little bit quickly. They've cut taxes. They're subsidizing user subsidies. This is the kind of stuff we're seeing to lower the pain amongst its citizens. Subsidy on limits on retail price increases. This is a little complicated economics, but what they're trying to do in essence is to lower the price for the consumer and pay off the producer through tax incentives and payments to the producers themselves. Cash transfers. We've mentioned this before. These are sort of the types of approaches they're using to tackle the cost problem. In other words, by paying people by giving people cash to lower their bills, that's one way. They're also trying to pay off the companies the supply companies to keep their Do you hear me? We still online here? I froze. Yes, I did freeze. I actually lost my connection. Are we still online, folks? Can you all hear and hear my voice, see the screen? Let me just close this. How bizarre. This has never happened to me before, but just give me a chance and we'll regroup. We can hear. Yes, we hear well. Okay, let me just give you let me see what I can do here. All right. Well, I'll shut this off for the time being. We don't need that. All right, let's keep on going. No video, but voice is good. Do we see the video now on? Yes, okay, great. Back now. All right, here we go. Let me just check one last thing. And what webcam do we see? Just a few seconds here. No, okay. Okay, it says there's a webcam. Then is there a webcam picture? If not, I'll kill that. Working fine. Does anyone, do you see the webcam? Yes, okay. And it's me, it's not a picture of a map. Okay, great. The hell with it. Let's go. Let's continue. Sorry for that, and away we go. So where were we? I think we're done with the PowerPoint. Pretty much. Yeah, we can just finish the PowerPoint. The idea is that the governments are really trying to reduce the cost to their citizens. That's for sure. Now let's take a look at some opportunities to trade, which is really what we're all about here. And again, if you have any questions, please just jump in. The first thing I want to show you, of course, is the energies. And unfortunately, and I say this truly with regret, the only gas contract we have at the moment is U.S. natural gas. I'm working very hard to get the Dutch or the European natural gas contract on the site that delivers in Rotterdam. Because that's where the action is. This is the U.S. natural gas contract, and it has a different set of fundamentals. It just does. There's no two ways about it. They're less affected. As you can see, the price has risen for sure, and it's a pretty good proxy considering we don't have the actual European contract, but it's not the same. But again, is this a great long buying opportunity? Yeah, you bet. No doubt about that, okay? Now, the only thing I do want to point out for the moment are these guys. This is West Texas Intermediary, the U.S. benchmark. It's been falling now since about the middle of June. So is it going to come back up eventually, but not in the near term? I don't think. That's my feeling. I could be wrong. And Brent is tracing pretty much the same picture, just a slightly higher handle. But oil is not following the same path as gas. All right. So the energy crisis in Europe is a natural gas, a methane-based affair. All right. So one obvious play is to buy gas. We've been long gas now for many months, since really the outbreak of the war in February. And it's been a damn good trade. It's volatile, but the long-term trend in gas is pretty much one way. So that's one obvious opportunity. I want to show you some other opportunities in the energy sector itself. This, by the way, is the MT4 platform available to all our clients, and I break up the assets based on industrial sectorization. This is a giant French power supplier. Look at this. Va-va-va-voom. Is it going to be going up? Yeah, I think it's going to be going up. This is a daily chart of EDF. Yes, and it's just, and it's like, now this you can see that limited supply where volume drops off is because the government has controlled this. But still, you can buy the stock, and it ain't likely to go down. It's not likely to move that much farther up, but it's surely not likely to go. It's not likely to move up quickly, but it's going to be moving up, and it's very unlikely to fall, in my opinion. Again, let me just state as a rule, what is going to happen when Arabia is going to sell oil in yangs and not in dollars? Asks Matesh. Yuan. Saudi Arabia is not going to be selling anything in yuan. The yuan is a completely unreliable, rigged and jigged proxy currency for the Chinese renminbi. The 135 billion, the 1.35 billion Chinese buy stuff in renminbi. The yuan is a offshore renminbi that's controlled and rigged and not freely convertible. So nobody is going to be using that currency to transact international trading activities in the near future by a long shot, Mate. Is my opinion. I could be wrong. Let me just say something about being wrong. I issue a standard risk warning in every presentation I make, and that is this. If you can't afford to lose the money you've got in this market, you shouldn't be here. There's a lot of risk here, okay? We talk about opportunities. There are opportunities. There are tremendous opportunities to make tremendous profits. But make no mistake, there are also tremendous opportunities to lose a lot of money in this business. And you have to be clever about it. And we run all sorts of sessions to show you how to help minimize your risk or control your risk. But make no mistake, there's plenty of risk here. And risk, by definition, is the probability of the unexpected occurring, and occur it does. So that being said, let us roll on. What are your thoughts on the new order by Ray, the new order by Ray Dalio, Mate says? I'll get to that in a moment, Mate. I read Ray Dalio very regularly. I've read all his books, and I'm a big fan, but I'll get to it in a moment. So this is ETF, a good stock. And where's the German? Here it is, German RWE. Need I say more? A terrific trade, a very, very good trade. This is a German, I think it trades on the, it trades in the Deutsche Börse. That is to say the DAX, German power supplier, doing very, very well. Let me see if I can just get a couple more. The energy giants themselves, Chevron. Let's go to I want to get to BP London, very nicely done. These guys are cleaning up. Here's one of my favorites, ExxonMobil. These guys are doing very well out of this, despite the fact that oil has been weakening in the last, say, 3 weeks. These guys are doing great. So these are great plays that in the energy sector. This is Canadian Solar. What's it called? Canadian Solar Inc. Yeah, this is doing very, very well because the marginal or the alternative energy companies are doing well out of this mess. So those are good plays for us. I just want to show you one more, and then I'll be here. We go. This is the one I want to show you. Royal Dutch Shell, also doing fairly well out of this. Those are all good trades. Now, finally, on the subject of trading, one of the things that has been particularly obvious to us here is that the stocks in Europe are taking a serious hit, with the exception of Britain. This, by the way, is not, and this you must understand for many reasons, this is not a stock index. This is an index of the US dollar strength. This is the US dollar index, commonly referred to as the DXY. DXY is its symbol on the commodities exchange. And need I say more? A tremendous buying opportunity on above average volume with a positive force index above the 20, the 50, and the 200-day moving averages. Those are all signs of terrific momentum, not likely to change in the near future. Strong US dollar. But the reason I point you to the strong US dollar is well, we'll get to that in a moment. I just want to point that out because I'm on the index page. But I want you to take a look at some of these stock indexes. This is the DAX, okay? You think they're having problems in Germany? You think the German stock market is going to be suffering more than it already has? Yeah, we do too. So the energy caps will not mute the energy prices, only the price to the consumer. Oh, I would say, largely speaking, Simon, yeah, that's on the money, more or less. It's and it's subject to radical change as we speak. But yes, as of this moment, you're correct. That statement is correct. Energy caps will not mute the energy prices, only the price to the consumer. That's correct. This is. I just wanted to show you the FTSE. That's the French. Where is the UK 100? Here it is, UK 100. Now, this is counterintuitive, but it's taken a dip down, and I think it's going to continue to dip down. It's, as you can see, it's dancing at the 20 and below the 20 and the 50 moving average, and it's just below the 200 now, and likely to continue to fall, in our opinion. So the indices are also good proxies for, this is the Euro Stoxx 50, by the way, same, wrong picture, same, this is the daily, all well below the 200 and now below the 20 and the 50. So those stock indices are good plays in a direct result of this energy problem, because Euroland is in a recession. It's going to get much worse. So while we talk about energy per se, the trading opportunities are Euroland wide, and those opportunities are exploited through trading the wider indices, as well as the following fantastic opportunities. And this is why I pointed out this is Euro Yen. Now the dollar yen is, the yen itself is weak for its own reasons. But I want to point out to you that as the world slides into deep recession, here's the pound CAD. The CAD is gaining great strength at the expense of the British pound on tremendous volume. This trade has been very good to us and likely to continue doing so. Why? The Canadian economy is heavily energy based and therefore gets strong. And against the pound, this has been a tremendous trade. All right. So this energy crunch has other implications for us. Pound Swiss. Do you think you could make money trading that? A child could make money trading that. Okay. So this energy crunch and the devastation it's wreaking in Europe has direct effects in the currency markets. Swiss yen. The yen is its own story, which I won't go into now, but suffice to say, any yen trade, look at this. This has been going on for months. Can you make money doing this? This is what it goes up every day. I'll give you a 4 hour if you have any doubts about that. I'll give you a week chart. Okay? Okay, week, day, whatever you like. This is a good opportunity. A very good opportunity, ladies and gentlemen. I'm here to talk about. I'm sorry for the wonkishness of the PowerPoint, but there are tremendous opportunities that result from the energy crunch, that's the energy crisis that's here and now. And let me just show you the dollar yuan. Who asked the question about? Oh yes, Matej asked the question about the yuan replacing the dollar. Let me see if I can find this. Here it is, the dollar yuan. Okay, look at this. Dollar yuan is weakening. It's gone from 636 to 6.95. Let me just tell you what that is. 6.36, 6.95. That's a 9.3% loss in the yuan in a matter of May, June, July, August. Call it 6 months. Okay, that's a major decline. 9.3% in the yuan, and it's going to continue. The Chinese economy is in terrible shape for other reasons. All right then, ladies and gentlemen, that pretty much rounds out what it is I wanted to point out to you. We've got weak indices, strong currency trades, powerful energy trades, and of course the actual underlying gas itself. So let's deal with some of these questions. What are my thoughts on the new order by Ray Dalio? I think he's on the money. I think Mr. Dalio is always on the money. For those of you who are not familiar with what he's saying, the world is changing in Mr. Dalio's opinion, of many, and it's reorienting from a, well, to put it simply, we're in the foothills of a Cold War with China, and whether that Cold War escalates to a real, genuine Cold War is yet to be seen. Mr. Dalio thinks it will, and I'm not in the habit of disagreeing with Ray Dalio. He's a really smart guy. He's made a ton of money, and he's worth listening to. So that's my answer to your question, Matej, about that. Any other questions, ladies and gentlemen? feel free. If there are no more questions, let me just tell you that, first of all, let me remind you, I want you to fill out, there's a little poll here. I'd like you to fill the poll out, and I'd like to answer the survey questions at the end. It helps us make these sessions a little bit more tailored to your needs. Next Thursday night at the same time, we're going to be talking about the UK economy and its situation being very, very serious. The pound is weakening. The energy crisis in Britain is no less, if not slightly more acute than it is in Euroland. And so we're going to talk about that next week. And again, we're going to be looking at trading opportunities there as well. And so that those are the reminders I want to make you aware of: the poll, the survey, and the questionnaire. Next week, we're going to be talking about the UK economic situation, which is very serious. And again, it presents us with a lot of trading opportunities. And so if there are no more questions, and I see there aren't, let me just say that for those of you who are looking for an online broker, please consider opening an account with us. This is an example of the kind of work we do for our clients. We're not right all the time. We don't pretend to be right all the time. We lose money like everybody else. But we do make more money over the long run than we lose. And after all, in our business is the sine qua non of success. Because lose you will. Anybody who tells you they can't lose or you don't lose are full of shit. Either they don't trade or they're lying to you. Everybody who trades loses money. You can't make money in this business all the time. But if you learn how to turn a loss into a gain, meaning you learn something from a loss and you don't make that same mistake again, already it's not a full loss. And if you learn, once you can master the rules of money management, risk management, your own tolerance for risk, you can start to make more money than you lose at this game, and then it becomes very, very interesting and lucrative. So this is the kind of work we do for our clients, and I hope you'll consider opening an account with us. For those of the regulars who are in the house and trade with us, we're always proud and humbled by your continued patronage of us as your online brokers. And so therefore, ladies and gentlemen, Matesh has another question. China is only losing because of their house marketing bubble, which they have popped. They have not popped their house marketing bubble, Matesh, not by a long shot. The Chinese banking system is deathly weak, deathly weak. If you just look at some of these, like, you can see on like National Geographic and whatnot, just look at these phantom cities they built. Dozens upon dozens upon dozens of these cities. I'm not talking about empty apartments in buildings or empty floors in commercial real estate buildings here. I'm talking about entire cities built lock, stock, and barrel with clinics and hospitals and schools and public buildings and hundreds, thousands, and tens of thousands of units, and each one empty. The debts that went into financing the construction of those buildings are unpaid. They're unfunded. The banks that lent that money are in deep, deep shit. And so the Chinese economy is in deep shit. They haven't popped any bubble by a long shot. They're terrified of that bubble. In fact, they just recently made another monetary move to prop up the weak banks. So no, I disagree with you, Matesh. They're far from taking care of their housing and financial problem. The Chinese are in deep trouble, in short. So I hope I've answered your question, sir. So let me say then, therefore, on behalf of the staff and the management here at Alvexo, I'm your host, Seth Julian, wishing you all, ladies and gentlemen, the ability to trade with confidence. Bye-bye for now. Jean-Claude asks, how does the new green developments fit into the energy crisis? Some of them are good and some of them are nonsense, okay? There's a lot of nonsense out there masquerading as green investment. They call it ESG now. Environmental, social, and governance. It means like less corrupt and more transparent. Bullshit. There's a lot of opaqueness and corruption. And there's even a term for it called greenwashing, where these firms try to paint themselves green, but they're not any greener than they were before they painted themselves. It's just makeup. So it has a role. Canadian solar is doing beautifully, but you have to be critical and careful about what you look at, Jean-Claude. However, they are still the top global marketplace. They are selling 20% of all the products in the world, says Matej. Yeah, okay, I didn't say they weren't. I didn't say they weren't. But keep in mind, Matej, the 313 million of them are locked down. They don't have a COVID policy. They have the zero tolerance policy, which is a gross failure. They don't even have a decent vaccine. Their vaccine is useless. And the people that are vaccinated and marginally vaccinated are the young people. The old people aren't vaccinated at all. So they have this policy when they discover one case, they lock down 20, 30, 40, 50 million people at a time. It doesn't work. It's keeping them restrained. And the results of this policy are yet to be felt. Okay, it's going to cause problems that we haven't even begun to feel yet. However, what are your thoughts on Russia and China relationship? It's doomed. China doesn't need Russia. Russia's a weak resource-producing nation that produces nothing but natural resources and weapons. The weapons are even B grade. China is not even interested in Russia's weapons. It's only interested in its hydrocarbons, and the partnership is doomed. It's not a marriage made in heaven. What about the windmills engineering production? Jean-Claude asked. Windmills are nonsense. Windmills and photovoltaic cells, they seem nice, they seem hip, they seem green, but I'm going to just give you one example. In the city I work in, on the top of the roof of my building, it's covered with a giant air conditioning. It's a modest building. It's 18 stories high, 19 stories high. It's not so big. It's a moderately sized building with a good sized air conditioning unit on top. In order to power that air conditioning unit with solar energy, you'd have to carpet the entire city just for that building. In fact, if you even take a toaster, the average toaster is about 2,500 watts. You'd have to have an area the size of your entire home just to power your toaster. Okay, so forget that. And we don't even have batteries to store energy that we do produce through this system. And furthermore, the carbon footprint of producing photovoltaic cells is so gross that we'd be better off just burning the oil itself than turning these coal and silicon of a certain nature, which requires a high temperature and has to be burnt with this special coal, into these photovoltaic cells. I won't even talk about the insanity of the windmills, because it takes about 800 cubic meters of concrete just for the base of one of these things, not to mention tens of thousands of tons of steel, which has also got a huge carbon footprint. And the average service life for these windmills is barely 10 years. They grind themselves into dust in about 10 years. So it ain't the way. We have to go nuclear. We have to find better ways of producing electricity without CO2. And in my opinion, nuclear is the way to go. What is your perspective on the most constructive way to go about this energy crisis? Best ways of supplying energy for Europe? Nuclear, Jean-Claude. And the French lead that. The French are the leaders in that. And they've been ahead of the curve now for 50 years. What's your view? That's my view, Simon. Uranium and nuclear. What about the Tesla gigafactories? Musk said that we need around 40 gigafactories to power the whole world. He's full of shit. He's a great guy. He's got great ambition. He's an enthusiastic, encouraging, inspiring leader. But when it comes to these gigafactories, these are profit-oriented undertakings that require enormous resource development, lithium, cobalt, stuff that is very costly to mine, is nearly impossible to dispose of properly after it's used. So, this idea that electricity is green is going to be our savior, alternatively, is just for the birds. We've got to be able to generate electricity without carbon dioxide byproducts and without the pollution that these batteries are going to saddle us with for generations. Wow, you've become lively. After I've signed off and said my goodbyes, everybody becomes very lively. Okay, it's good enough for me. I don't mind. Doesn't matter to me. It's fine with me. But it's about the time I do end the session, ladies and gentlemen. So if there are no more questions, maybe I'll do a session, since you guys are so interested in alternative energy. Maybe we'll do a serious deep dive into this. I'd like to do that, and I'm going to make myself a few notes right now and think about doing that very seriously, because it's a great question. And today's section begs, and you questions brought that out. So I'm going to try to introduce that in the near future. Yes, the metals, all those gross metals. My pleasure, Montes. Thank you for your participation. It was very, very interesting. And yes, I always do enjoy my cigars, rest assured. All right, ladies and gentlemen. So I am going to bring the session to a close. Thank you so much for your interactions and your input. It was really useful, and you will see the results shortly. So stay tuned, watch the space, and trade with confidence, ladies and gentlemen. Bye-bye for now. My pleasure, Juan. My pleasure. It's always a pleasure having you in the room. Yes, you too. Thank you. Thank you, Jean-Claude. Thank you very much.